Hey there, everybody, and I'm wishing you guys a great 2024 here. Be careful what you wish for. Everybody and their brother is wanting a rate cut. We're going to tell you why you don't want one. Stay tuned.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Just promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening. Okay, Phil E. Dog, why don't we want a rate cut? Isn't that great? People have cheaper purchasing costs and projects can get done. What say you?
Well, the market certainly rejoiced when Powell got really dovish at the last Fed meeting, which was a complete U-turn from the previous one, where up until that point, he said don't expect a rate cut until 2025. So the market was kind of operating off of that. Then all of a sudden he uncorks everything and says, hey, we're probably looking at about 3 rate cuts next year. And of course, the Fed funds future market, which is much more aggressive in its outlook and has been wrong on that, is now thinking they're going to do like 6 or 7 possibly next year. We'll see if they're right. But what it does is it tells you, or it makes you want to ask, why did the Fed pivot so suddenly? Personally, I think you need to look at history, and that's where this chart comes in. You look at this chart here, each Fed rate cycle has ended with a major financial failure. So if you go through the chart from left to right, and this goes back to the 60s, you have an instance where they get into a rate hike cycle regime, for whatever reason, fighting inflation, etc. And you end up having these events, right? And then all of a sudden we are into a recession. It's almost every time you see an aggressive rate hike cycle, you know that you're within a year or two of a recession, basically. And, as we got into the 80s, this happened with the Japanese bubble. They were going crazy with their central bank. Back then, the central bank was basically wanting everyone to borrow money and buy property and everything else. And it spilt over everywhere. They were buying property up in Hawaii and elsewhere, and it all collapsed. And that's what happens when you print money and you get everybody addicted to debt. Sooner or later, it implodes because there's really no real underlying growth. And we saw something similar, I think, with how 2022 started. You had this surge of printed money, and then all of a sudden that kind of stopped and you had a bit of a collapse. Now we're getting this echo bubble, if you will, and we're still seeing this excess pouring out. But now that we're in this situation again, the Fed's trying to raise rates into this because they're trying to, in this situation, they're really trying to cool inflation, which they finally tipped over the edge because the last 10 years of easy monetary policies catching up to everything. And we're in another situation now where they're talking about cuts. So I think even though the market's championing the pivot and the talk of cuts next year, personally, I think they see the data and they know with pretty good certainty. And Powell even said for the first time, without even wavering, he said we're likely into a recession in 2024, which completely got glossed over by the headlines. And that's part of the plan. I mean, the headlines are basically driven by the advertisers. The advertisers for these headlines, typically for financial related headlines, are the big banks. And so they want retail, they want everybody participating here at the highs. Meanwhile, under the hood, things are being prepared for an exit. So to me, Bob, I think they're looking at the same data we are, and a lot of things are not where they should be if we're entering a new bull. And like you mentioned in the previous video, late cycle bull is more like what we're seeing here versus early cycle bull or end of a bear.
Yeah, I mean, look, you get to a point where it's pushing on a string, right? So, you and I have access to credit anytime we want it. We have high credit scores, but we don't need the money, nor do we want to invest in this environment. So I don't care if it goes from, a 7 or 8% prime rate down to a 2 to 1% prime rate. I'm not going to take on the debt. And then you have other people in the other situation where they're desperate for the debt, but there's no way the banks are going to lend going into an environment, even if rates are falling, because they still can't cash flow sufficiently. And we learned that in 2008, the difference between cash flow lending and balance sheet lending. because when the cash flow dried up, they found out the balance sheets didn't support the loans. And I think we're going to come to that situation again. And every time we have a cycle top, we find out that when cash flow goes away, it's balance sheet. That's why I always laugh. I could get a loan with no balance sheet other than what I'm borrowing against if I have a job. But if I don't have a job and we're just enough to pay the loan, but I have a pristine balance sheet to cover the loan in case I default, they don't lend you the money. So it's kind of a funky approval process, that they go through, and they get burned every time. And so that's what's going to happen here. When they start rolling down, people aren't going to want the money, and the people that want the money aren't going to be able to justify taking on more debt because the financials don't work out for it. So, our view is when this thing starts happening, you better be rolling yourself into TLT. You better be rolling yourself into SARK. You better be buying the VIX products, because that's really going to be your only safe haven, and everything else is going to get taken down. Even the good stuff, Bitcoin, gold, oil, all that stuff will get burned because that's the most pristine collateral out there, and people are going to sell what they have to sell in order to cover cash flow. You'll see all kinds of crazy dumping. Ironically, natural gas will probably do well here because it's heavily shorted, and they're going to have to close off their short books, and probably the Japanese yen too, Phil. When we get closer to that first rate cut, we'll definitely be talking strategies to take advantage of it. And if they're true to their word, they're going to do it in March. It might be scary, Phil, because we think maybe March is the bottom. That might just be one of those little blips that get people blown up into April and May. It's going to be a really interesting year. And if he doesn't lower in March, people are going to be bummed out and have to recalculate out into the future all the rate cuts. So they're in a no-win situation.
Yeah, if it's a Q1 rate cut as a reaction, and we're probably having a nasty pullback because they raised during 2022 and we had some nasty drawdowns and they didn't flinch. So, if we get that drawdown into March, I don't think that we're going to see new highs from that. People are really looking at that going like, okay, it's a higher low, let's go long. I think you're going to end up with a lower high and you're going to roll over, especially, that's something else we got to watch is the 2-10 yield curve. If that starts to steepen again, it's taking a little break, but we're in that part of the cycle where we would expect to see that steepen. And if we start to see that happen and we get into an environment now where it's yields down, stocks down, you want to run for the hills, because that's where, and I think that's what TLT is front running. I think TLT bottomed early, and these markets, they tend to lead what's coming down the pipe. And I think that's what we've seen in TLT. It came down, took out some weekly lows on the long-term chart, bounced, got back over that 88 to 90 level, and now it's cracking over 100. There's a lot of strength there. And I think that is where the big money is slowly and quietly getting into, because when this does happen, TLT will be back, trading at 130. And I wouldn't be surprised to see TLT trading at, somewhere between 130 and 150 when this is all said and done, if we get the recession playing out like we think it is and like the data is showing that it probably will.
Yep, totally agree. Hey guys, if you like what we're talking to you about, hit like, hit subscribe, hit the notification button, check out our services. We think we have a pretty good handle on this. And I think, check out our track record. We talk macro here, but we trade micro in the rooms, and we've been having a really good run. Come join us. We'll definitely teach you how to trade correctly. With that, Phil, I'll catch you guys later.
See you guys later.
Trade Genius.